I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, happy Thanksgiving. It's our Thanksgiving special.
Yes, it is. Thank you. Same. Right back at ya.
What's on the top of your mind today?
This phone call last night between Lighthizer and the Chinese, Mnuchin, no Navarro. I think there's movement. I think that the Chinese have kind of backed us into a corner by saying, listen, we're gonna police intellectual property. So this is better than the soybean deal. The president can declare a big victory, by saying, listen, they've changed their ways. And that could mean that delay in the December tariffs. Phase one, which would be financial, be a good reason to buy Goldman, buy JP Morgan, two action alert stocks, maybe American Express, MasterCard, action alert stock. It's a big deal, and it's a change. The president, I believe, by having Lighthizer, having those high-level talks at night, is really saying, let's get something done. And now that the Chinese have capitulated, and he certainly can claim that, he can say that his good friend Xi capitulated on a key issue. So therefore, things are better, and it'd be good for a lot of companies.
Jim, when we hear about the strength of the consumer, we hear spending, spending, spending.
Right.
But besides from that, what's one other big indicator that the consumer is strong?
Well, I think that when you see strong numbers from Best Buy and from Dick's, talk about things you don't need. I mean, you go to Dick's, buy soccer equipment, not helmets, by the way, soccer equipment. You go to Best Buy to buy things that you simply do not need. It makes me think that you got to go back to buy Home Depot. I'm going to talk about that with the team. Might be time to buy more Home Depot. Stock went all the way up. It's come all the way down. I don't think it's really bad. They did do better than Lowe's. Might be a possibility.
Your Real Money column this morning focused on Robinhood, and you pointed out that E-Trade kind of became a dinosaur in the wake of Robinhood.
What's amazing is E-Trade basically has the same amount of accounts as Robinhood. E-Trade's solidly profitable. E-Trade addressed on their conference call the decline in the end of commissions. Made a very good case, a lot of deposits, and it's only worth $1 billion more than Robinhood, which loses money and but does have $900 million in the bank. Well, it has raised $900 million. I don't know how much they have right now, but it's really a testament to either how wrong stocks are, private market is, which is entirely possible. That's what I discovered when I was out west, or that the character and quality of the account is considered to be remarkable in the same way that E-Trade was remarkable in the 80s and 90s. I remember in the 90s, I used to work hand in hand with E-Trade when I started TheStreet. I went out to see them a bunch of times. They had that demo that you really wanted. People who traded like mad. Millennials are trading. They tend to be trading ETFs. But when I talked to Anthony Noto last week, they're doing fractional shares. He's the CEO of SoFi. And they're buying the Amazons, they're buying, dollars worth of Amazon. So if you offer fractional shares, that's not Robinhood's, they don't do that. But fractional shares is a big home run. Why? Because people used to buy Ford and buy GE. I think GE's making a comeback, but they like low dollar stocks. So now they're buying fractional shares. So the millennials are really buying. They like stocks. They haven't been brainwashed into just buying the S&P 500. They want to do things. They're very much, look, I'm very much in tune with the millennials. I want you to be in the S&P 500, and then I want you to own individual stocks because maybe one of them will make you rich because you'll hit a biotech or some, you can do a spec. You can do some individuals like Facebook. And those who don't agree with me, I know your game. You think that the individual's stupid, and you want to denigrate the individual, but you don't want to admit it. You think the individual that you're performing brain surgery. You ain't performing brain surgery. I'm unfriendly with enough neurologists because of my problem with that. I am the spokesperson for the American Migraine Foundation. You ain't brain surgeons. You just are shysters, because what you're doing is saying that the average American is an idiot, a moron, a chowderhead, a mountebank, and a knave, and a fool. Millennial people obviously think you're wrong. Do the millennials buy the right stocks? The millennials buy stocks because they know that they have a basis in ETFs in the S&P 500, but they want to own individual stocks, and you would keep them from buying them because you completely are arrogant, and it's outrageous, and I'm calling you out right here. You disgust me. You disgust me. I mean, I would go into my bona fides, but, you know, and then they'll say, well, Jim, you said you should have money in Bear Stearns. No, I said that your account would be safe because I understood what SIPC did, but not that you care because Roger Ailes ran a campaign against me and they believe it. Ridiculous.
So
here's the truth. Here's the truth. Listen to me. Index funds and individual stocks are right. That's what Robinhood's doing. And those who say that that's wrong, shame on you. Shame. You just really think that we're all stupid? It's not fair.
So Robinhood understands the millennial.
Yes,
you
they
understand the millennial, but does
Yes.
E-Trade? No?
I like E-Trade. I think that something's going to happen. I just don't believe that it's crazy that they're valued at the same price as Robinhood. It's a pretty good firm. Really good firm.
Jim, we've got Black Friday coming up, as everyone is, I'm sure, aware. Is Black Friday a good time to go shopping for stocks?
Well, historically, it's been an up day. So the answer is no, we don't like to buy up days. We like to buy down days. We like it when things are on sale, not when the S&P's taking everything up. So I'm going to say, if it's traditionally the same way, no, don't wait buyer. Don't buy. Don't buy. Don't buy.
Don't buy. Okay, we've got Bull Market Fantasy live around 10:45 a.m. this morning. How excited are you?
I mean, look, well, here's the thing. There's a lot of guys on the bubble. Ben Stodos on the bubble, by the way.
Ben Stodo is one of the Mad Money analysts.
Right, and top analysts. And I think that it's really important if you're trying to figure out how to get into the playoffs, there's no margin for error. And Bill Enright and I, in an incredibly popular program, by the way, really kind of taken on. I have the answers. Bill watched the Eagles lose this weekend, which was very telling.
He was there.
He was there, and we're going to talk about the psyche. We're going to talk about the collapse of psyche. Maybe we can talk about Brandon Brooks, whom I like very much, and his anxiety problems and how courageous he was to talk about them. It's crunch time. It's crunch time.
Took the words right out of my mouth. You need to tune in because it's crunch time.
It's crunch time. No doubt about it.
All right, so that will be live on bullmarketfantasy.com around 10:45 a.m. But before you head to bullmarketfantasy.com, head on over to actionalertsplus.com because we're about to do our daily rundown show over there, and they have a new initiation at the portfolio that you're going to want to hear about.
Absolutely.
Jim, happy Thanksgiving. Thanks so much for joining us.
Same to you.
All right, guys, thanks for tuning in. Head on over to actionalertsplus.com. I'm Catherine Ross, and happy Thanksgiving.